you know, and investors, of course, love the upside, the price possible increases on the upside. But you also have to be mindful as a board member or officer of a company.
What kind of that journey? What attracted you to gold mining, and in fact, Gold Express Mines, where you are now?
Well, yeah, I'll try and give an interesting view on what happened. I grew up actually. I'm from a mining family. My family's been in mining since the 1870s in Colorado and Leadville, where it started. My father was with American Smelting and Refining, ASARCO, for 40 plus years, moved from Leadville to Arizona, and ultimately ended up in North Idaho in one of the biggest silver districts in the world, the Coeur d'Alene Mining District, where companies like Hecla and Core Mines and Sunshine and Bunker Hill and all these big names that you might remember or hear about, and of course Hecla and Core being still around, and Sunshine still being out there. But that was the district where there's 1 billion plus ounces of silver production and some of the deepest mines in North America. So I went into mining engineering out of high school at the University of Idaho, and worked summer times and Christmas breaks and things in the mines in North Idaho and in the Coeur d'Alene district. Worked for Hecla and ASARCO both, and then got interested in the Navy towards, I think I was a junior in college. The Navy was recruiting pretty heavily for expanding the Navy. Reagan was in office, so we were going to like a 600 ship Navy at the time, and so, out of college, they were looking for engineering people, and out of college, I had agreed to do a 4-year, stint in the Navy. I went through officer candidate school and then onto a ship stationed in Newport, Rhode Island. Pretty good duty, really. It was a fast frigate, and it was an anti-submarine warfare type ship. So we spent a lot of time in the Atlantic. At that time, the Cold War was still happening, and there were Russian submarines coming out into the open ocean at that time. And so our job was to try and keep track of those submarines, ballistic submarines, of course, that were armed with strategic weapons, which we had a lot of interesting times doing that. A lot of it kind of solo ops, not in like a battle group or anything, just on your own with an embarked helicopter and basically chasing submarines. And so then I got out of the Navy in '89 and using up some of my military education benefits, I elected to go to law school up in Boston at Boston College. After that, I decided to move back to Idaho, and very quickly kind of got back into the roots of my family and back into mining. So, and mainly in mining exploration and startup mining companies, juniors. We've been doing it since the mid '90s now. So,
it's really interesting.
That's the story there. I really enjoyed the Navy. It was a fantastic experience. Yep.
John, I hope they don't drag you back into the Navy with the Cold War's reinstigated.
Well, I'm hoping I could do a little bit more, be more helpful on the home front. We've got a big need for redevelopment of a lot of our mines and, our own domestic smelting and refining. It's unfortunately been pretty much offshored. And so we have to think about those things. And I think I could probably be more useful there than standing watch on the deck someplace, although I enjoy doing it. I think I'd be more useful elsewhere.
Yes, I agree. So basically, if you could tell us a little bit, I mean, obviously your mine's name is Gold Express Mines now, but you mentioned silver. So what primarily are you mining, and kind of what kind of methods and byproducts would be coming from that? But I guess my question is, as somebody who's real, somebody who's in the real physical side of the business, have you been forced to undertake hedging strategies, which probably you wouldn't have normally wanted to do?
Well, I mean, right now we're not producing, but certainly when you decide to go finance these projects, right? You're thinking about the risk exposure of declining prices, and mining is once you're in production, you're basically a manufacturing operation, right? And investors, of course, love the upside, the price possible increases on the upside. But you also have to be mindful as a board member or officer of a company and mindful of your shareholders, particularly if you've taken on debt, that you've got to guard the downside. So yes, we were at U.S. Silver, for example. We knew that investors didn't like to see silver hedged, so we hedged the lead production, which actually turned out to be a very good move for us. And we only hedged about 30% of the lead production, and then of course it turned into a very, very positive thing for us. And everybody said, well, we should have hedged more, but I don't like to second guess your wins, right? We did well with that. And I think that being involved in a multi-commodity mine maybe gives you the opportunity to hang on to 100% of your silver or gold, because investors do like that, and I understand it, and maybe hedge one of the ultimate commodities that you're producing. Like if you're in a copper gold situation, maybe hedge a portion of that copper production. Same with a lead silver or a zinc lead silver mine. The multi-commodity aspect, I think, is something that sometimes is overlooked, but can be advantageous to an operator. Particularly now, we have strong prices in zinc right now. For example, if Bunker Hill, for example, got themselves into production, and they plan on that in the next year or so, if I were them, if I were still on the team, I would consider strongly putting in a hedge on some zinc production. Why not? I mean, protect the downside for your investors and your shareholders. That happened with U.S. Silver, and there's ways to do it and still maintain a lot of your upside. And you can do these collared hedges as well. That doesn't, you don't lose all your upside on the commodity. So there's a lot of things you can do. And of course, I feel like the metal prices, particularly gold and silver, under these conditions that we're seeing today, it's kind of ridiculous seeing these prices where they're at. To me, it's a tremendous buying opportunity. From the perspective of that, this is one of the reasons we've acquired so many projects, frankly, because you see a good project, and if the holding costs are low enough and it's justifiable, it's really just like a call on the commodity. That's how you have to view it, particularly where you have an asset that already has a drilled resource. It's like, it may not have a 43-101, a confirmed resource, but if you've got confidence in the past operator that did the drilling, I don't mind holding on to a couple 100,000 ounce resource for the cost of reclaim fees every year. To me, it's a very cheap hedge. I've explained that to the shareholders of Gold Express, why we have so many properties. They wonder, and I say, well, for example, I'll give you an example. We've got a property in California, which a lot of people don't like California. And, from an operative viewpoint, I get it. I do point out to them that the Mesquite mine was a very smooth transition, and the mine's been producing, since 2006, back in production, and very smoothly been transitioned to a new owner. I think when we purchased it from Newmont, it was a very smooth transition with the state. And California operates. The counties have quite a bit of leeway, quite a bit of power. The county commissioners in San Bernardino County or Imperial County or Sierra County operate, pretty independently. So we've got a project we picked up by staking in Sierra County, which is up near Downeyville, one of the great old mother lode districts, that Kerr McGee drilled back in the late 80s, early 90s, with a few 100,000 ounces of resource already drilled. And undoubtedly, we think there's a lot more there that we're holding for, 20 claims at $165 a year. I don't mind tying up a couple 100,000 ounces of resource for $5,000 a year in holding costs, right? So, to me, that makes a lot of sense. One of the reasons we have the number of projects we have is just because we see some resource and some value there just by holding the asset.
It's really interesting to hear you talk, because you're providing a hell of a lot of information here. And I think, that was just a simple hedging question, but my goodness me, I understand it's very complex. And I think, as you say, that the interesting thing is when you have these multiple sources of production that are all coming out of one particular, you've got these natural hedging abilities.